today's video, I'm going to be teaching you how to avoid fake breakouts. And if you're really ready to take your trading skills to the next level, make sure to stick around with me up the end to understand a step-by-step process. So let us get started. What is going on, superstars? I'm so super excited to have you here. If you new, I'm by names of AJ Kelly, CEO at the Online Dives, where we dive deep into the world of Forex trading and help you to unlock your true profit potential. The strategy is moving like this. As well, we know the market it always move when it's making the higher highs and higher lows. So when do we trade a breakout strategy? We always do what? Draw our trend lines here, what we call a support and a resistance, and then we wait the market to break out, and then we take our trade. We trade as a reversal. So the most cases when the market is making the high highs and higher lows, or making the lower lows and the lower highs, are you getting the point? We always experience that we have a fake breakouts. When the market is moving like this, we find that the market can come, tends to break, and then we execute around here, the market come back against us, and then it continues with the trend. So by which means, if we are trading this, we want to catch what? When the market is making the high highs, is making the uptrend, we want to trade the reversal. We want to catch the reversal at the beginning of what? Of the changing of the trend, and then we continue trending down. Are you getting the point? So the most cases, or the most times, we find that we get caught when the market is trending upward, and then we want to change the direction so we can move with that direction. We find that we take the trade, and then the stop loss get hit. So how do we deal with situation? As well, when the market is doing like this, making the high highs and high lows, we want to use support and resistances after drawing them as support and resistance of what? Of the trend, or what we can call the trend channel, or we can use the trend line, whatever what we can use, breaking out, and then we take the trade. But how do we catch the super entries that exactly the market when it breaks around this area, so that we can continue going down without getting our stop loss get hit? Are you getting the point? So here is the solution. When the market is making the high highs and high lows, we wait the market to come and try to break. So when the market is breaking, here we have to find the momentum candles. The momentum candles are like this. When the candle it breaks this, the trend line, when it's so big, if that not enough, not happen on the on the breakout, we wait the consecutive candles, by which means we have 3 consecutive candles. All of them, they are going upward, or it might be downward. So those candles, they will help us to identify that when the market is trying to break here, we have a sell, and then the market breaks here. So we execute after the close of that candle, and then our stop loss above the market when it comes to make a retracement, so our stop loss will not get hit. So another step to avoid fake breakouts, let us say that you have seen the trend in H1. And then what happened? The trend got broken in H1. When the trend got broken in H1, you see here you are bearish engulfing candlestick, and then you executed. Before you do that, if to confirm that this is not a fake breakout as well, when you have drawn your trend line on H1, and then you are waiting the breakout so that you can execute. After the market breaks you trend channel, or you trend line, or your support and resistance, what you have to do, switch off to H4. Go to H4. When you reach in H4, if it is a fake out, the H4 candle will not close below your trend line, your support and resistance. The H4 will not close below. It will just come, and then retest this area, and then they press what, make a rejection, and comes up to tell you that it is still a bullish momentum trend. It's still a bullish momentum trend. Alright, as well, you can see right now we are on the chart and we have a volatility 75 index as our pair, which we are going to be using as an example. You can see that in H1, we are on H1 time frame as well. We see that the market is making the high highs and high lows. So we draw our support and the resistance around the what, the multiple points of the price rejection. So you can see around this place we had here a rejection, so when we connect these swing points, they can make us what, a trend channel, and we wait the market to break this trend channel, and we do what, we take the trend to continue downwards. But unfortunately, you can see that after the trend get broken, we took the channel, we took the entry, and then the stop loss was what, was hit. So how to avoid this as well? You can see, I told you, when you see that this it is happening, before you take your entry, you have to go to switch off to what, you switched off to H4. So the step one of avoiding this was to draw you what, you the last lower high or the last lower low before the trend get broken. We can see around this place, this is our last lower high. We can see that the market comes making the high highs, high low, high highs, high low. This is our last. We draw our line here like this. We wait the market to break this line, come and retest, and then we execute, and then we continue down. So as well, you can see that the market didn't give this opportunity to break this, the last lower high. The market could come back and make a retest and continues up. So as well as the market could have broke this, the last lower high, we could catch this entry, and then, which means this was a fake out, and then we didn't got caught in. If we can be patient that the market didn't break this as well, you couldn't catch this entry. So that was the step one. Step two, to switch off to H4. So if you can see clearly here, if we switch off to H4, you can see it very well that the market did not give you any candle here around this place. There was no any candle here to tell you that the market is ready to go down as long as it was break. So do you see what happened? Let me remove this, and then we see very well. You can see around this area that the market didn't give us a clear candlestick pattern that to show that the market now it's ready to move downwards, which means here we had to get at least a bearish engulfing pattern to engulf all of this so that we can confirm that the trend it is changing. Are you getting the point? But when you go back to H1, you can see that we had a good breakout, as long as it was a fake out. This is the way how you can avoid the fake breakout. So if we extend forward our trend line, we can see exactly what I'm talking about. You can see when we extend our trend channel here around this place, you can see it very well. You can see that very well. The H4 break this trend as with the big momentum candle like this, as a bearish engulfing, of course, in H4. Then you execute around here, you stop loss be above, and then you can see, of course, the market moved very well to the downside, and it's still continuing down as well. So if we come to H1, you can see that in H1 here we have something like this. Are you getting the point? We had something like this. If you can see very well that if this was our last lower high, where is our last lower high? This was lower low, lower high. The market come to form a lower low here and continues up, failed. So we get our horizontal line and we put it around this area. We wait the market to break that. After the market breaks that, it confirms us that the market now it's ready to move downwards. So yeah, as well, the market have shown us that it's ready to move the downward. We have to wait a retest. You can see the market came here around the side, giving us what a retest. We executed. After executing, where to put our stop loss? We put our stop loss above the all of this leg. We put our stop loss above of this leg, and then we rate the market down. Are you seeing? You can see that the market came to make a retest of this area which was broken, and that was not enough. Only it formed here a double bottom, come back to form what? To form a double top. Are you getting the point? Also, it formed a double top, whereby that it was still this entry, this stop loss, it was still above, and then the market was not hit. So what if the stop loss was what was just below around this area, which means you could be taken out, and then the market continue to your side. So that is the only way how you can avoid the fake breakouts, guys. See you to the next episode. Peace.